Hello, good afternoon, good morning, good evening, everybody. Hello, hello, hello. How are we doing today? Good morning, good afternoon, good evening. Can you hear me? Hi. Hello, everybody. Hello, hello. Who is there for the first one? Who is the first one to join today? Hello. Good afternoon, good morning. Who is there? So I see 3 people online. Yeah, I see 3 people, 6 numbers now. That's good. We've seen a lot of people joining now. Good stuff, good stuff, good stuff. We're gonna move very fast. So fasten your seatbelt. All right, thank you so much. All right, thank you, Simon. Thank you, Demi. Loud and clear. Great stuff. So we're gonna move very fast today. If you are joining us for the first time, you can quickly show that, so that we might slow down a little bit. But if you are already a member, you've seen this presentation before, it won't be any problem for you. So let me know quickly if you are joining for the first time. All right, so if no one is joining for the first time, or maybe later on, we will explain further. All right, so we are talking of this strategy. We call it the inside bar strategy. You can just tell us where you are joining from while this is ongoing. Yes, let us know where you are joining from. So we have this wonderful strategy. We call it inside bar strategy. What is an inside bar? Inside bar is a candle that is smaller than the previous candle. So simple. It's so small that the high and the low of that candle is contained inside the previous one. So simple to understand, right? So you have this current candle that is so small compared to the previous one, and it is contained completely inside the previous one. Let me show you an example. An example is let's say this white candle here, or let's say this white candle here. It is smaller than the previous candle and it's contained inside it. Let's look at another one. This black candle, also the same thing, is smaller than this previous candle. Both the high and the low are inside it. So this is what is called the inside candle. Okay. So the strategy, the plan of the strategy is actually to find a breakout from that inside candle. So once you find an inside candle, you want to find when there's a breakout of that candle. It could be breakout to the top or breakout below. You don't care really. What you care about is there is a breakout. Okay, so if the breakout, it breaks to the top of the candle, then you go long. If it breaks below the candle, you go short. It's so simple. Okay, so there's only 2 criteria. The first criteria is that at least you must find an inside candle first. Okay, so this is also a price action strategy. So a price action strategy is a strategy where you are looking for price action. You are looking for what the price is doing. You are not relying on indicators. So our main focus here is price action, although we have an indicator to filter out some of those breakouts. So the premise, the original premise, is a price action strategy where we are looking for a breakout of inside bar. But we know there's going to be a lot. There are going to be a lot of breakouts. You don't want to take every breakout you see. Okay, so it will be some specific breakouts. But anything you are going to trade on this strategy is going to be breakout of the inside bar. But we want to filter out some of those breakouts. We don't want to trade all the breakouts. So that's why we have 2 indicators to help us to filter out some of those breakouts. The first indicator we have is the moving average. You can see there. So I'll show you the moving average. I'll show you. It's a 10 period moving average. Okay, the 10 period moving average, what does it do? You can see it's a 10 simple moving average. Okay, we all know what simple moving average is. Moving average is just the average of the last X number of periods. So if you say 12 or 10 period moving average, you add the last 10 days together and divided by 10. The last 10 prices divide by 10. That is simple moving average. It's as simple as that. Okay, you know there is exponential moving average, which has a different calculations. We don't want to go into that one now, but we are using just a simple moving average. Okay, what's the function of the simple moving average? We know the simple moving average tell us whether the current price is cheap or is expensive. Okay, if the current price is above moving average, it tells us that we are in an uptrend. So we want to use the moving average to tell us what trend we are. And of course, you know, in trading, trend is your friend, right? We all know that. So what we need to do is to go with the trend. So when your price is above moving average, you are going with a bullish direction. When your price is below moving average, you are going with bearish direction. That's all the moving average is going to help us to do. So that's the first criteria, moving average. So you can see all this color here, they are all breakouts, but you don't want to take all of them because some of them will not be okay to take. So we need some criteria to decide which one to take, which one not to take. Okay, so first criteria is a moving average. The second criteria is what we call, this color here is bandwidth, Bollinger Bandwidth. Okay, what does that help us to do? It just filter out when we are in a range market. So when the market is trending very strongly, the color goes red. When the price is trending, it's not trending, it's just ranging, the color goes yellow or green. So you don't want to trade when the color is yellow or green. You only want to trade when the color is red. Okay, so now we have laid the foundation. So we know when we find an inside bar which is above moving average and bandwidth, expand this chart so that we can see the candle properly. Okay, so let me pick one of this. Let's pick this one. Yeah, let's pick this one. So although it looks like this inside candle and the previous one are the same size, they are not. The inside candle, the high is less than the high of the previous candle. The low also is less than the low of the previous candle. Okay, so in that scenario, we have found our inside bar, and we see this inside bar is above moving average, and we have seen also that we have red bandwidth. So it gives us a buy position. It gives us a buy signal. So it says, okay, it is time to buy. So what do? You add a line. So that line tells us when you break the high of that mother bar. So we call this the mother bar. When you break the high of that mother bar, you will go long. Okay, and you put your stop loss right at the bottom of the inside bar. On this occasion, they look like it's the same the same price, but actually if you look at it very well, there will be some pips difference. Okay, so this is your buy line. So you bought on this line here, and you will set your TP1, because first thing when you take any position in any trade, actually, whether forex or shares, whatever you are doing, you have to consider two things: your take profit target and your stop loss. So to be safe and to trade like professionals and to make sure you have the right money management, you got to use stop loss. Okay, there are some traders that don't use stop loss. It's possible they have strategy that work without stop loss, but to be safe and to know that you are not going to be wiped out, always better to have a stop loss in mind. So in our occasion, you can see we already put a stop loss here. Okay, so that stop loss is going to help us to determine our take profit target. So we have multiple levels of TPs, take profit. Level 1 is the same size as our stop loss. So if our stop loss is 10 pips, our take profit 1 is also 10 pips. Okay, so in this case, this is our stop loss. The difference between these two lines is our stop loss. So we can find out what it is. On this occasion, we can find out what that stop loss is, and once we know the stop loss, it's going to be our take profit target. So it's about 8 or 9 pips. 9 pips is our take profit target 1. So we reckon that our take profit target 1 is around there. Then we are going to do another take profit target 2. Take profit target 2 will be what? Twice the size of the stop loss. So instead of 9 pips, it will be 18 pips. So let's draw that one here. So that's 18 pips. We can go for the take profit number 3 as well, which will be what? 27 pips, somewhere around there. Okay, so we have now set up 3 TPs: TP1, TP2, TP3, and this is our trade, and this is our stop loss here. Okay, so this is just one trade here. We are just trading this breakout. We are only taking this. We are only thinking about this breakout. This breakout, that's the only one we are trading right now, but it has given us 3 times our stop loss. So that's 1:3. So if you have risk $10, you are making $30. If you risk $100, you are making $300. So that is but you got to risk based on your account size. The rule of thumb is that you use 2%, you risk 2% of your account size, but that should be the high end of it. It's better to risk less. If you risk less, then you are likely to stay longer in the market. You are not going to be wiped out, although reaching your profit target also might be longer, but it is better to be longer and be in the market than to be quicker and blow out your account. So it's always good to use a lower risk percentage. So rule of thumb is 2% is a good one, but if you can use less than that, that will be also credible. Okay, so Dilo Africa is your first time. Okay, no problems. I hope you can understand it so far. It's not difficult, right? So if you have any questions, you even sound. So when there is an inside bar, you can set the alarm to notify you, and you will know that, hey, it has happened. So get ready to trade. We have tried this one. This strategy can be applied to any of these pairs, any pair, any time frame. So currently we are on 15 minutes time frame. If I like, I can change it to 1 hour time frame and see if there are going to be any trade. Okay, so if there is going to be trade, I will see it. Okay, so we are now on an hour time frame. Okay, so when we go on an hour time frame, we will see the difference, and we will know if we have trading opportunity or not. Okay, so we are now on an hour time frame. Okay, let me zoom in there. So we are on our time frame. Okay, so let me draw our 2 lines. Okay, let me draw our 2 lines. Okay, this one line here, and I'm going to draw the second line as well to the breakout to the bottom. So I'm going to draw one line to the breakout to the top and another line to break out to the bottom. Okay, but if we break out to the top here, we are not going to take if we break out to the bottom here, we are going to take the trade, and also if we break out to the top, we are going to take the trade. Why? If we break out to the bottom here, the price will already be below moving average. That is a sell. And if we break out to the top here, yes, we are going to buy, because by the time the price is also above moving average and Bollinger Band is red. So for us now, we are waiting for either of these two lines to be breached. So if the high of the inside bar, okay, I can see the inside bar is a white, is a hollow candle, the white candle. So if you put your stop loss above that, that will be very, very tiny stop loss. That will be questions. Any questions? Okay, so Oluwaseun, you from Ogun State in Nigeria. Welcome. Tamil, good to see you. Diablo, good to see you from Abuja. That's good. Your first time. Excellent. Christine. Hello, Christine. Okay, Demi, as usual. That's good. That's good. That's good. That's good. That's good. That's good. That is excellent. Okay, so let's move our stop loss to the right place. I think our right place will be it for this trade to trigger. So two things can happen. The trade will trigger here, and then we put our stop loss, and stop loss will be this small, this very small stop loss. And you can see the potential for our take profit is huge. Let's assume that we have this breakout and we hit this support line here. You can see we have like 1 to 5 reward ratio. If that is our stop loss and our take profit, final take profit, let's say is on this support, actually on a 1 hour, depend on which time frame you are using. So let's say you go to 5-minute time frame, then you focus only on the 5-minute time frame. Okay, solely on 5 minutes time frame. Okay, so but if you're on a 1 hour time frame, you are focusing on an hour time frame. Depend on which time frame you choose, and the time frame you choose will depend on your availability to trade. Okay, so or your own psychological makeup. So if you are someone that love fast action, very quick actions, you go for 5 minutes chart. If you are someone that you need time to make decisions, then you go for a longer time person. For example, this is a 5-minute time frame, I believe. Yeah, this is 5 minutes time frame. As you can see here, these indicators has identified to us that there's a breakout, but of course this breakout is not going to happen because we are not going to trade this breakout. The reason is because the bandwidth is yellow, and we are not going to trade when the bandwidth is yellow. It means there is no trend, and you can see there is no trend. You can see 5 minutes chart, there is no trend here. You can see that's why this thing is yellow. So even though you have the inside bar, number 1, number 2, this other indicator prevents you from taking those trades, which has actually helped you, because as you can see, there is no real opportunity here to make any significant money. So let me zoom a little bit in here so I can see a bigger picture. Okay, so we can see that this one, there's no trade in those, there's no opportunity to trade here, even though it gives us some inside bar, but we can't take them because of the Bollinger Band. Okay, excellent. Etuarina, the only one and the only Etuarina. Okay, so you can see here we have some chances to trade. You can see here we have a breakout here on 5 minutes, and you can see we have the bandwidth is red, so we can take this trade. Okay, we can take that trade. We can also take this trade. Bandwidth is red. This trade we can't, because I think the bandwidth is yellow at this point. Let me see. Let me see. Okay, so you can take the 3 trades, 1, 2, 3. So it means that you set your take profit on this one, set your take profit on that one. Even the third one, you might be able to hit your TP1 as well. As you can see, the price actually got to the top of this candle here. So, and as you can see, we have fall down from being in a trend, and now we are ranging. That's why the indicators has gone yellow. Good, 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 good. Any questions from anybody? Hey, Modesta. Hello, Modesta. How are you? Nice to see you again today. Nice to see you again today. So I hope there's no more question from anybody. If there's any questions, let me know. The strategy is very simple. Pick the inside bar, look for moving average, where is the price, and finally the bandwidth is red. That's all. Once the bandwidth is red, you pick your inside bar, and if it's above moving average, you buy. If it's below moving average, you sell. Simple. So we're not going to take that long tonight. So I've just shown you this strategy. So if you have any question, post it. Otherwise, we're going to wrap up very, very shortly, and we're going to make sure that if you don't understand anything, just let me know. And remember to give us a like button before you go. It's going to be a short one today, very short one today. Let me look at one more chart. Let me pick any charts now. GBP USD. Let's see what that says. Let's see what GBP USD says. All right, we'll look at one more before we go. See if there are any opportunity to trade that. Even gold with it. You can trade indices, any pair you like, time frame. As you can see on GBP USD, there is no chance to trade, right? Because the bandwidth is yellow on a 5 minute. Bandwidth is yellow. You can see all this from here. Bandwidth is yellow, so there's no trade. Even this inside bar, there's inside bar here. There's another inside bar here, but there's no opportunity to trade because it is yellow. Okay, that's on 5 minutes. But if you go to 1 hour or 4 hour, let's say we go to 4 hour, you may see a different picture on a 4 hour chart. So it depends on the time frame you are using, will show whether you have a trade or you don't have a trade. You can also move from one time frame to the other. Just browse the time frame and see which of the time frame. Like we are now on 4 hours chart, there is no opportunity there as well. You can see we have been on bandwidth has been yellow for quite a long time. So all this inside bar, there's no opportunity to trade. If you don't have a red bandwidth, tough. Hey, no more questions. Okay, thank you so much everybody for joining tonight. It's been an excellent. I don't want to drag it too long. If even those people that joined for the first time seems to understand it, which is great. So it means that we'll probably catch up again next week. So get ready, and then I'll see you next week. So thank you guys. Take care.